Good evening, guys. It is Friday, June 28th, and I coming to you today with a recap of this week. Been out of town for work, so haven't had a chance to make any videos, but I will give you a quick recap of the week's action as well as some trades that we took, um, and some potential ideas and some stocks that I have on watch for next week after the G20 uh, summit is completed and concluded, and all of the news and volatility as a result has abated. Um, so let's start with just an overall look at the market. So in the past week, what has the market done? So you can see this is the daily chart. The prior high of 293.87 that was crossed here was again crossed on on the 20th, which is last week, and we also have been kind of pulling back a little bit uh, from last week. So the market has been down slightly. The past couple of days, it has made up about half of that down move. But you can see that on the S&P 500 anyway, there is a pullback, has been a pullback from the prior high. So it hit an all-time high, and then has pulled back from there pretty significantly over the past few days, just due to some news, volatility, etc. You see, it did close this gap here, which was from the 17th, and then it's bounced about 50% bounce from this entire decline into today, which is Friday. So you can see, I'm going to pull up the um, actually the S&P 500 futures. So I just want you to see some of the action that's happening after hours, just in anticipation of the summit and the meeting between President Xi and Trump. So this is the S&P 500 mini futures, the E-mini S&P futures. So this is the futures market. You can see here that the futures in the last, this is today, okay, just in the last 30 minutes, and maybe even less than that, maybe the last 20 minutes of the day, which their trading day, the futures trade until 4:15 Eastern time. So there's a 15 minutes of additional trading after the broader market is closed. So you see this huge move in the last 15 to 30 minutes of the day. Just in anticipation, likely of an anticipation of some sort of a deal on tariffs with China this weekend. The meeting is happening Saturday, Osaka time, and we'll be looking for um, Sunday's futures opening to probably gap in one direction or another, depending on what happens. There will probably be a significant gap to the futures going into Monday's market open. So, I mean, and it actually, the way that the market has been moving, you can see it actually does look like we're going to have an, maybe potentially higher prices on stocks going forward and into the near term anyway. I mean, if you look at a weekly chart on this, the last 2 weeks, pretty big. I mean, if you take a look at this, it looks like a cup and handle. I mean, it is a technical pattern. Take a look at the monthly chart even here, and it looks like, we have two opposing, not opposing, but two candles of the same size body, which usually indicates a reversal in trend, or at least a continuation of that second candle up. So you can see this is a monthly chart. It's hit on this 20-month average line and has bounced, and kind of a cup and handle move on the weekly, and it could potentially create new highs. I mean, how high it goes, no idea. I mean, 3,000 is a nice even number. It could potentially get up there. So I've scaled back on a lot of my short positions going into this weekend, and waiting for the summit, to conclude and to just see what next week brings. I mean, with the holiday week also, it's a shorter week. So, don't want to be I don't want to have too much on the table once, we're going to the weekend, a weekend like this that could have a potential big binary move or binary event to move the market in a big way. So that's the overall S&P 500, just a little bit of a review there. So last week we talked about a couple of stocks that I had some positions in. So I think the two that were remaining were Netflix and Lyft. I did I did let you all know that I did get out of Snap last week, but I was still watching it for a potential move to the upside. So Netflix, you can see here, this is Netflix kind of choppy chop action. It had crossed over this descending trend line last week, and we talked about this doji here, right? So I have just as a reminder, I had a call spread that I was short, so sold a call spread that I rolled out into July from June, and you know, we did see a cross over this trend line last week, and due to this doji, I thought it would be a potential for maybe a couple days of continuation move and then a down move, or even just a direct reversal. But it did kind of grind up next day, just barely, and then the following day there was a big topping tail. So I put my stop, so what mentally my stop was going to be if the stock got above this topping tail, I was going to just go ahead and buy back my call spread and for a loss. But it actually, I got real lucky. I will say I got lucky. Um, I could hold this, I could have held this position. As long as it doesn't actually get above this area here, 375, I would have been fine holding it. But with all the volatility, the G20, et cetera, I wanted to get out of it before this weekend. So I got lucky, and the next day gave me a pretty strong down move. And we had talked about I was looking for a potential, I had an alert set to where if it hit this trend line, I would get alerted to a potential, opportunity to buy back the option, the spread, so that for a profit, because this had acted as a level of support, and it could be another potential level of support, which it actually was. So you can see it kind of pierced through slightly, and then has bounced pretty much, recovering this entire down candle. So on this day, on the 25th, I actually did buy back my call spread for about a 45-50% profit on the original of the original credit that I received. So it wasn't a full, I didn't let it expire and make the full credit, but I made about half, which to me, you know, is actually better. I don't usually wait until options expire, especially with spreads, debit spreads or credit spreads. Take it about at 40 to 50% profit if I can, because you have much more volatility the closer it gets to expiration with the Vega, it's called. So the amount that the pricing moves is much more aligned with the stock. Your theta, your time value is all out of the stock, and out of the option, and you're pretty much going with the flow of the stock at that point. And so options, you're really trying to collect a credit, or if you buy an option outright, you're not collecting, you're paying a debit. And a move that's 50% of the potential profit on that option, especially on a spread, that's really a really decent profit. The aim isn't to hold it till expiration. Let's just say that. So that's Netflix. I'm out of that. It is actually, if you take a look at it, still pretty much in this range. It has the opportunity to chop around a little bit and then get back below this 200-day moving average. So I'll be looking for it to cross back below the 20 moving average, and for a potential additional short in the name. It has earnings coming up, so we'll see what it does at earnings. That'll be a really interesting play. I don't necessarily think it's going to do so hot, but that's just my opinion. So I'm not gonna do anything till I see some action after earnings and seeing what it does then. So we'll keep it on Netflix. Secondly was Lyft. So Lyft, I'm actually still in. If I could get the stock right, yeah. So lift, we talked about this reverse head and shoulders pattern that it has based out over the past several weeks. And we utilized this. I was using this dotted line here as my potential stop, my mental stop, which is the bottom of this bar right here on June 18th. It has not actually come down to that level yet, and is looking like a bull flag in this area. I mean a little base here, and it's popped above it actually um, yesterday. Today it crossed above this blue line, which is I think this low here, the low of the third day of trading, and potentially a good, it might be an area of resistance, so we'll see. But this is a line it has to actually cross through in order to continue its move out of this reverse head and shoulders pattern. So I am looking for a continued move in lift to the upside. This whole area here between 65 and 75 is pretty choppy. So it could retrace all the way back. I mean, it could you know extend all the way back up to the 75 level. My first target will probably be here at this gap at 70, around $70, and then my second target would be 75. Nice round numbers. It's a new stock, new IPO rather, and so we'll be following it pretty closely. But this was what I was looking for in lift, so I have maintained the position. Today, it kind of did a little bit of a doji where it got above the line, and has at the end of the day has made its way back down to this 65.44 area. So we'll see what next week brings for lift. It doesn't have earnings again until August, so we have a lot of time to potentially make some moves here into the direction that we want. So on lift, I actually have a outright call option, one call option on lift, and then I do have a put spread, a put credit spread. So I've sold a put spread below this area, and then I have a call. So next week, I'll make sure to put the orders up so you can actually see where my targets are with my options. I don't have an order to sell these out yet. So that's lift. So a couple of stocks that I have on watch for next week that are good setups. Snap we talked about already. Snap is still watching it. Today the action wasn't so great. I was looking at this kind of flag that it was making here, but today it actually had some weakness. So we'll keep an eye. It still hasn't made it below this kind of the flagpole of the flag move that it had over the 1450 pivot, but we'll see. So we are keeping an eye on this, looking for it to get back above $15 for any continued move. I mean, it could just base here for a little while also. I mean, it has had a significant move already. So we're going to keep an eye on Snap for a move over 15. Secondly here is Oracle. So Oracle we had looked at previously for an earnings play, which we did well with on the 20th here. And it is pretty much just flagging here. It's consolidating after this big jump over the all-time high of 55.53, the prior all-time high, and it has not made it back to that level yet. So as it bases out here and consolidates, we'll look for it to stay above 55.53, and if it does stay above 55.53, we'll look for a potential entry point over the all-time high, 57.47, or if it makes a particular basing pattern, we'll just keep an eye out. But 57.47 would be a breakout from this basing pattern. So that's what we're looking at right now because that is the all-time high at the moment. So that's Oracle. We'll keep an eye on that for potential trade, and it would be a swing trade. And then we also have we've had some movement in the biotechs and the home builders. So we talked about last week the home builder index and diversifying your positions outside of just tech and semiconductors and things that have been momentum names recently. But want to just show you guys the XHB, which is the Home Builders Index. You can see here we talked about this cup and handle pattern. It is pushing up against that right now, so it's already crossed above. It's at an all-time. It's at a 52-week high here, crossed above the prior kind of. This could also be considered reverse head and shoulders, whatever it is. The neckline here is right here. I'm just right where we are right now. So I haven't put a position on in this yet, but I am looking for on Monday to get into this position long for a move, out of this basing pattern. But I am looking to get out of that position prior to the July Fed meeting, because there are all kinds of rumors about the Fed potentially cutting rates 25 or 50 basis points. So I don't like to get in. I don't like to be in it in a volatile situation like that prior to that kind of a binary potential move. So we still have several weeks, a few weeks there, a couple of weeks. So Monday is, the trade that I'm going to be looking at is XHB to the upside. Also, we'll see. We'll look at ABBV, which I actually got in today, and it still has the potential to move a little bit further. So in ABBV, it had a move based on the purchase of Allergan that it made last week. So it purchased Allergan, the maker of Botox. So it actually lost a lot of value based on that purchase that it made. And so I waited a few days and looked to get in for the gap fill. And today it started, pushing into that gap. So I missed the first move, actually. The move would have been right almost at the beginning of the day over this 70.67 area. I ended up getting in around 71.50 with just a call option. So I have a call, an in-the-money call. So I usually buy 70 or 60. It just depends, 60 or 70 delta call in July. So I have a July call for ABBV, and I'll be looking for a target here of 73.80, which is the bottom of this spike, this pivot right here. So that's my first target on ABBV. I've got some profit in it right now, even today, but I'll be looking for just a little bit more as it makes its way into this 73.80 area. So that's what I'm looking for in ABBV. And I did get into that trade today. Let's see. The other, I think there was one that I wanted to talk about that I had to get out of. Actually, I don't think I mentioned that. It was Adobe. So Adobe last week, we talked about it pushing back above. It pushed above after earnings. It had two huge candles and was looking really good for a move into the 300s. So it actually did get into the 300s the day I purchased, the option, which is the beginning of this day here on the 20th. So, and I was looking for even potentially some pullback, but basing and then continuation higher. It did not do that. It actually consolidated for a couple days, and then on the 25th had a pretty strong move to the downside, crossing back below this trend line, which is a longer term trend line here. So, and even below the filling the gap, almost going down to this 286.46 area pivot. So I actually had to get out of this position. So I took a loss, just a little bit of a loss. It was almost break even right here as it was crossing through into the, back underneath this trend line. So into this window here, which is what we were talking about for earnings. So I'm out of Adobe. Honestly, it could just have some chop until it starts this move higher. So still going to watch it for a little while, but it does look like it's, kind of maintaining around this trend line right now. So let's see. It could act as an area of resistance, but I had to get out of it. So the trade didn't work the way I wanted to. Just wanted to keep you posted on that trade as well. And then lastly, some of the semiconductor stocks have been strong. So if you take a look at the SMH, it has, which is a semiconductor ETF that tracks the semis. It has been a little bit strong. You can see today it has a little bit of dark cloud cover, we call it in charting, but this SMH chart is kind of all over the place. So you have to look at some of the names, right? So we've got AMD, um, you know, still a little bit weak off of the all-time high here, or off of the 52-week high of 34.30. Kind of double topped there, and it's just coming. It has come down from that and is consolidating here. You also have NVDA, which has been a little bit positive, had some good moves off the bottom. So it has a kind of a double bottom here, actually, off the 124.46 area and a higher low here at 132.62. And it's had some successful moves, but it still is underneath or beneath its 200-day moving average. So has crossed and has recaptured its 20, but still under the 200. So the next, NVIDIA actually looks positive for the short term, but with earnings coming up, it's not a stock I'm going to trade. So we also see Intel here. Intel's had some pretty negative movement after earnings, and so it is, kind of also looks like it's double bottoming right now, and it still hasn't recaptured its 200, but it is flat. So let's see the movement it makes around this 200 moving average. It could just be real choppy for a little while. Not a great chart pattern, so I'm not looking for that either. Micron, however, is one that I've been looking at for a short for a while, but I've been looking for it to recover a little bit. You can see on the weekly chart a little bit better what's going on with Micron. So you see here it has had this huge move from 2017 all the way from like below, it's from like 10, 11 to 64, and ever since this top here last year in June, it has just been on a slide. So it looks like a giant, reverse, like a head and shoulders pattern rather. If you look here at the shoulder, head, shoulder, but it's a little sloppy. So, but it is a clear-ish topping pattern. So it's a topping pattern that's completed, and it's right here. If you look at this green line, it's right here at this 20-week moving average. So it looks like that could be an area of resistance for this stock, which is what I'm hypothesizing here for my potential trade on this. And so going back to the daily, it also today hit its 200-day moving average. It got above it. You can see in the pre-market it had some movement to the upside, but never really got back up to that level. So it's fallen hard in the morning and is just at the 200-day moving average. But it looks like it, may not be able to hold that. So what I'm going to look for in Micron is continued weakness on Monday. So if it manages to stay below this 200-day moving average at 38.62, I'll be looking to get into the position short. So I'm actually going to put an alert at 39. So if it gets above 39, not something I'm looking to get a trade in immediately. So we'll keep an eye on it to see that it stays below the 200-day moving average. And at that point, I will probably sell a call spread up here around 40, 41, 42, 41, 44, 41, 43, something like that. Or 40 maybe even, depending on if it's weak on Monday. So I'm looking to sell a call spread in order to basically bet on the fact that Micron probably will not be able to get above this consolidation area here or this trend line. And really, we want it to stay below its 200-day moving average. So we're looking we'll be looking to sell a call spread up here in this area. So that's Micron. So those are some ideas for next week. We have some interesting times coming this weekend, depending on what happens with the talks between the president of China and, of course, our president. So let's see how those talks go, what the outcome is, and we'll start again next week with a with a new perspective, I guess. We'll have some earnings trades next week, and we'll be a little bit more active. So thanks for joining. Have a great weekend, everybody, and happy trading. Take care.